Hey, hello everybody. This is Cynthia from Bridge Union, and today we have a fireside chat with Stephen from Bridge Union and Lucas from Bridge Mutual. Hey guys, nice to have you here. Can you let me know where you're calling from and a small introduction?
Lucas, you start?
Yeah, absolutely. So hello everyone. Thanks Bridge Union for having me. My name is Lucas N. I'm the Chief Operating Officer at Bridge Mutual, decentralized, permissionless, privacy-oriented insurance protocol for your crypto portfolio. And I'm calling right now from Warsaw. It's a lovely afternoon, a bit cold, but classic Central European November here.
Nice to have you.
Hi guys, I'm Stephen, product lead at Bridge Union. We are an insurance aggregator, and Bridge is one of our longtime partners, so we are happy to have them in the call today. And we're going to talk about some of the innovations we are bringing to the community in the coming weeks.
Great. So my first question is, we all see that DeFi is maturing, it's growing. And a couple of years ago, it was the same hype as NFTs right now. But what happened in the meantime with DeFi, and why is decentralized insurance relevant in the first place?
Yeah, I might start here. So what we're seeing across the entire ecosystem, across the board, is that the crypto industry in general is maturing. The companies are maturing, so all the entities that started as those crazy, innovative startups experimenting with this technology and seeing what products can we introduce are going into these long-term, much more professional phases when they offer better tailored and much more sophisticated products. They're raising bigger rounds of money, they're attracting smarter people, smarter talent. So the entire industry matured with its offer and, well, how it's perceived in the world, because this attracts the attention of investors from the, well, legacy finance or legacy tech, let's call it. And in order to make it sustainable, because this is the key term here, those companies and this industry had to change. Of course, the culture, the relaxed culture of memes is still there, but the industry is maturing. So this is the first reason. Second reason is the sustainability aspect, and it relates to both the insiders and people who built in DeFi and the communities. So this was a huge boom. We had the DeFi summer that matured and provided this exponential growth in so many areas. But at some point, a user or a stakeholder in the industry has to ask herself or himself a question: how long can this last? Or how can we make this last? So we entered the area of sustainability, and at some point in that discussion, you start to think about insurance, and you realize that insurance, as similarly as it is in legacy finance world, is something that mitigates the risk and smoothens the development, and I would say smooths the edges of edge cases that can be dangerous to the participants. So as we will go beyond 300 billion in DeFi, as crypto and blockchain will start to amplify and expand other industries, the need for insurance will rise proportionally to the actors and users involved. Maybe it might even actually rise faster than that, because as institutions and professional entities will enter, their appetite and their understanding of insurance, their appreciation for it is much higher. So we will see a huge growth and explosion of need for insurance in the coming years for sure.
Yeah, we should not forget that in the recent weeks, we have seen billions and billions worth of DeFi and crypto hacks. And this is something we are protecting the community against. And as Lucas is saying, there's like institutional serious players entering the space who demand these kind of products before they invest in DeFi.
So just to give an explanation, who are these guys and what they are insuring for? Like who is it?
Yeah.
What are you afraid of?
Yeah. So what we really see is that it's not the typical DeFi user who buys an insurance. The typical DeFi user grew up in thinking this is the wild, wild west. I will win some, I lose some, and I don't care about it. And if I invest in 10 things and one got stolen, I still have 9 left. That's the mindset which made a lot of people rich. But we're also seeing more older, maturer DeFi users who are consolidating. And they want to buy a house, they're getting a family, and they're like, yeah, will my assets still be there in a few years? And these are the people which are really buying DeFi insurance together. And that's the same trend I was alluding to before, that you're getting more and more institutions. You see now them poking their toe in the bath to find to invest in Bitcoins and Ethereums. But some institutions are now going into DeFi, and as they are going into DeFi, they start asking for insurance.
Also, but in decentralized insurance, I also understand there are two sides of the coin. There are the ones who take out insurance and the ones who are providing insurance. But I also hear there is a challenge there because sometimes some of the covers are sold out. Can you elaborate on this?
Yeah, so one of the key paradigms change in the decentralized insurance world is that the side of providing capital of coverage providers, it's much more open and it's much more accessible. In the legacy finance world, say the big insurance companies are managing their capital, and it's a relatively closed opportunity. You can't directly participate in it. And one of the big revolutions of decentralized coverage and no KYC protocols like Bridge Mutual, for instance, is the accessibility. So with a couple of clicks, you can become a one-man, say, coverage provider for a crypto project. So you become a one-man insurance company in a way. So you're providing capital for this particular insurance to this particular project because you think that, well, I deem this project safe. I know the team, I'm familiar with their developments, I'm confident they're safe, and I'm willing to put money on the line here in exchange for a yield, of course. And
do you know what the beautiful thing here is? Because most people investing in DeFi, they do it in farms, and you don't really know where your yields are coming from. And
exactly
what Lucas is talking about is a real business model, because you put in insurance capital and you're getting the premiums of the ones who are buying insurance. So we yet have found another real business running on crypto, and which we are now starting to improve.
Absolutely. Let's not forget, let's take a step back here. The insurance business in the legacy finance world is a $5 trillion business. It's a huge business, and it constitutes a huge portion of the traditional finance market. In crypto, we have a lot of custodians, we had a lot of yield farms, we had a lot of asset management, but where does the yield really coming from? Well, it can come from just new tokens being released, being valued at a certain price and then distributed. But then at the very bottom, once this is over, at the very bottom of it, you need to have a sustainable business. And these sustainable business in crypto are dominated right now by lending, by credit-like business. You can participate in businesses that take the revenue from fees, trading fees, for example. You provide capital and you participate in some sort of operation that it's where users are being charged for transactions, for example. But the huge thing, a huge component of that's coming is insurance. So it's risk-based insurance-like products in which you can deposit capital, deposit liquidity, and get rewarded for whatever risk you're taking. It's the landscape of products like this in traditional finance is huge, but with the promises and opportunities DeFi creates, the promises of technology, the utilities of the token, the accessibility of it all, the sky is the limit ultimately. And we at Bridge Mutual are actually, this is our primary focus. Our primary focus is to be the company that builds the most sophisticated insurance-like DeFi products that are permissionless, that are accessible, and that are offering stable, well, relatively stable as in DeFi, high APYs for users and entities that are willing to diversify their portfolio. Because why wouldn't you do it? You put money in lending, you put money in trading fees, you put something as a collateral here and there, but you want to have in your portfolio something that does business differently. We had a claim in the past, and the claim was a perfect example of how the system would work. So unfortunately, in August, Popsicle Finance got hacked. During the hack, we had an active policy for a user. The user submits a claim where the user provides evidence that he permanently lost money in the hack, and that during the hack, he had an active outstanding policy. He provides evidence from the blockchain that the hacker drained money from the pool here and there, the hashes, the transactions. He provides pure evidence that always comes from the team. These can be tweets, then these can be other announcements that the event happened. And then in a fully decentralized, permissionless way, the BMI holders, VBMI token holders, are voting and assessing whether the claim is valid and whether they should actually pay out the entire claim, because users can submit claims up to a certain amount, but they can, it's not a given that they will lose that amount during the hack. In that case, the user got his entire policy paid out, because this is unfortunately what happened. Yeah. So exactly within the 2 weeks from the event, after both the stages of voting, the user received the money back. That's pretty fast.
That's pretty nice.
We intend to make this process even faster. We started with 2 weeks to see whether all the processes would go as planned and safe. They do. So we will be likely increasing that to make the platform go a bit faster.
Yeah, I hear stories about people who got hacked and they are still waiting for their money for a couple of months because they don't have insurance, and they can see it they can see it sitting on the blockchain, but they cannot get their hands on it. It's pretty bad. Okay, cool. And another question: you're working on a V2. Bright Union is working on a 2.0. Like, what are the platforms working towards?
Yeah, so we are working towards providing capital more efficient, but we are actually building on the next version of Bridge. So I would like Lucas to take this question first.
Yeah, absolutely. So as I said, Bridge version 2 introduces a number of things. It greatly increases the capital efficiency of the protocol. The most important features are the leverage portfolios. So we're going to introduce pools where users will be able to deposit liquidity and provide liquidity with a leverage, with a tall leverage and a wide leverage. So what that means? It means that the money you put, the capital you put, would be used as coverage liquidity several times in one protocol, and it would be used simultaneously for many different protocols. So instead of providing coverage for only, say, Aave, you would be able to provide coverage for Aave, Uniswap, and Synthetics simultaneously. So what this creates, it creates a bit of a riskier product, but the chances of all of them being hacked simultaneously are, of course, very low. So you might as well provide capital to a number of pools simultaneously. And of course, you will be getting a much higher yield in that case. And what's interesting is that this yield will continue to be high as you're providing capital, unlike in the case of pools where as more users and more capital is getting in, the APY always goes down proportionally. Here, we will be able to provide a stable product that will deliver relatively high APYs. For the first pool to launch, we're expecting 100% APY around that number.
And then how is that spread across stable coins and your native token?
It's the big portion of that APY comes from in the BMI token. Smaller portion comes in the stable coins that users use to pay for the policies. We made a decision a long time ago that the BMI internally will be run on stable coins so that you don't get paid out in claims and BMIs, etc., to kind of protect users from volatility. And there is also a third component, the shield mining. So if there is a native token of a given protocol deposited in that coverage pool, you may also be rewarded in that token. But the APYs will be high, And depending, they will vary in terms of the risk, but we will be able to create a stable and transparent pools that will be very attractive for investors. And they're perfect for bundling and perfect for distribution products, which I suppose is exactly what you'll be doing.
No, Lucas, that's very exciting because in December, we also start building on top of your Bridge version 2. So we will introduce the Bright Risk Index, which will invest in your leverage staking, but also in 3 or 4 of your competitors. So we will we indeed diversify it a bit further. So we allow any DeFi user to stake basically the whole risk industry, which I think is great for the user because they get a return on a real business model, but it's also good for the whole DeFi community because they can buy more insurance products. And we are really, really excited that the industry is making this next step because the industry only exists for a year. So I'm very glad with the speed you guys are moving with, Lucas.
Yes, we've adopted a very ambitious speed. We're developing complex products, sophisticated ones. Unfortunately, this is tied up with delays sometime, but we have to make uneasy choices. So we want to, simultaneously, we want to build as fast as possible and get to the market as fast as possible. But at the same time, we want to create ready products, safe products. We don't want to have any exploits ourselves, of course, after we release. So this is the risk of innovation. It's a startup world. Delays happen. They happen all the time in crypto, but we are building as fast as possible. To add a bit to what you said before, yes, it is an exciting time for the crypto insurance industry. We are already seeing interest from enterprise asset managers that are asking about providing liquidity in our protocols because they already want to be involved in this kind of asset class, this kind of crypto asset class, because many of them are looking to avoid, they're not that interested in putting money into custody investment vehicles that are then again investing in some other underlying protocols. They want to do it directly. So the interest is definitely there. We're very early in the process. There is, as I said, it's a huge market to address. And once we develop this technology and this infrastructure, again, the sky is the limit because we can create various pools. We can create a bit safer pools, risky pools. We can create 100% degen pools where all the variables will be set to the maximum and the APYs will be crazy high. But if you want to use that product, go ahead. It's an open market, and that's what's beautiful about it. We can see on the platform that users are taking different positions in different pools, and that's the demand indicator for various products. So it's an extremely exciting time to build, and we're happy to be part of the ecosystem.
Nice. If I hear all of it, it seems like insurance, decentralized insurance, is becoming a very attractive thing. You know, it's. I think in my mind it always used to be boring, but now it's very attractive to get into it, and even with leverage staking or with the Bright Risk Index, it looks like a sustainable model. So yeah, I don't know. Do any of you have anything to share before we end up the call?
No, but I think. Insurance, often people think it's boring. It's one of the oldest industries are there, and some of the companies exist for 200 years. But it's also one of the most growing, and it really helps people. So I'm excited to be part of this journey.
Absolutely, but the industry waits for a disruption, and this is the disruption that's happening right now. Blockchain, it's a perfect technology for insurance. And we are extremely early. So the companies Bright Union is working with are relatively small sector. We're the first in the game and we're building. And once the demand gets there, and it will get there because, as I say, users are starting to think about sustainability. How do I protect my assets? Most of your assets in legacy finance world are insured. Deposit, your real estate, cars. People arrive at the conclusion that these things happen universally and the insurance is necessary there. So combine this need with the, I would say, endless amount of ways in which we can structure amazing insurance-like investment products, and the potential is actually endless for the DeFi world. So very excited. Our version 2 launches in December, end of the year. Similarly for Bright Union, so we're getting ready for exciting Christmas time.
Nice.
Cool.
All right.
Thanks, guys.
Yeah, thank you too. It was nice.